Okay, welcome to Coffee with Marcus and Mark. In this show, we talk about what's happening in the markets and how we're trading them. Today is Monday, October 31st. Happy Halloween. And it's going to be a fun show. So, on Friday, stocks rallied harder than Punch spiked with Everclear at a college Halloween party. Can the rally continue? The Dow makes it 4 winning weeks in a row. It's a spooky week for the market with we'll see what traders are focused on. It's Fed time. We'll review what to expect. And earnings are still in the spotlight. We have Uber, AMD, Qualcomm, CVS, Starbucks, just to name a few this week. And tech tries to recover from last week's fumbles and much, much more. Plus, I'll show you how we're trading these crazy markets. As you can see, there's a lot to talk about. So let's get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. I'm flying solo today, but on most days, Markus Heitkoetter, Rockwell's founder, is with me, and we show you how we trade these crazy markets. You could say we have a ton of experience. We know our stuff, and we're not afraid to tell it how it is. If you're looking for some honest insight into the world of trading, you are in the right place. Marcus isn't with me today because he's busy getting ready for trick-or-treating and having a hard time finding a white shirt for his Halloween costume. Actually, he's at the money show. So Marcus, if you are listening in, I hope you find that white shirt. In the meantime, we're going to dive in, show you how our trades are doing, how we're tackling these markets, and we're going to look at what's moving the markets today. Now, let's go ahead and let's jump to the charts here. I have the S&P 500 up. And what a Friday, what a week last week when you look at it. I mean, gosh, the S&P 500 was up 2.5%. The Dow just roaring higher, up 2.6%. The NASDAQ leading the way on Friday, up 2.9%. But you see that the NASDAQ really kind of choppy, having a hard time getting off of these 2022 lows. So the NASDAQ just kind of hanging in there. And we know that there were some big tech earnings last week that really held the NASDAQ back. You see here that early in the week, we made highs for the week. We pulled back. And even with Friday's big rally, not enough to get it back up towards highs that we had earlier during the week. The S&P, on the other hand, finishing strong. It was the best close for the S&P in over a month. And gosh, here, if you're into fib levels or just general technical analysis, let's look at this here. Oh, let's try it again. There we go. Look at this from those highs to the lows of October. Look where we're at. We're at a 50% level here in the S&P. Can we continue this rally break to the upside, or is that it? I mean, this is what we're going to have to contend with this week. There's a lot of news, a lot going on that we want to talk about that could have an impact on the markets. Markets are down right now, but honestly, all things considered, and with last week's huge rally, I think that this is minor at this point, and it's just really a reaction to what we saw last week and last Friday's huge day as we went into the weekend. Now, the S&P and NASDAQ 2-week winning streak. The Dow, however, look at the Dow go. I mean, coming off of these lows, this is an impressive rally for the Dow. The old blue chips, you could say it's a bit of a dinosaur, but hey, this dinosaur is moving along. The Dow finishing higher for 4 weeks straight. If you look at where we're at for the month, and we'll have to see where we finish up today with it being the last trading day of October, the Dow up 14% here. Huge month. Looks like we're going to, well, I'm going to call it Captain Obvious here, but we will snap a 2-month losing streak for the Dow. The interesting thing and the thing to watch here is, will we beat the best month since 1965? Either way, we're on track for the best month since 1965 when the Dow was up 14.4%. It does look like with this dip here, if things hold, it will be the best month since January 1965. Well, let's see, though, if we get a little bit of a rally into the close and we get just 0.5%. And if the Dow could take out that 1965 month, either way, huge month for the Dow. So anyway, let's go back to daily chart and let's see what is going on here. Let's actually go to some names and then take a look at what traders are focusing on. So last week it was a rough week for some of the tech stocks and just some mixed numbers here. Amazon, we could look at Amazon, just a real tough day after earnings, finishing almost 7% lower today, opening slightly higher, moving up a little bit and then pulling back, so down 1.6% as we speak. We could also look at Microsoft dipping, rallying a little bit, but also down 1.5% today. We could look at Google. Oops, let's type it right. Parent to, or Alphabet, the parent company here, and we see that there was this earnings reaction that was negative. Saw a nice move higher on Friday. Today down almost 2%. So no follow through here for some of these bigger names. We could look at Meta breaking down to 52-week lows. Just a lousy day last week after earnings, down almost 25%. And the slide continues. Gosh, let's see where we might have support here. Is there support? 94. I mean, I need to go to a weekly chart here to see when we were last trading at these levels. Hard to. I mean, maybe some support around 90, but it's hard to make a case for strong support with this one just in a free fall. Nasty reaction to earnings, and it does look like rather than rebounding, this slide is continuing. So not interested in Meta myself, and gosh, they need to figure out what their plans are and communicate that to shareholders or possible investors, because it seems like after being such a strong social media company, investors don't know what the heck to make of this new move to the metaverse, and exactly what the plan is, what's in store, and how they're going to really see sizable profits from it. Either way, whether or not you think it's a good thing or bad thing, traders say this sucks with Meta down almost another 5%. So tough week, but Apple did something right. Let's go ahead and pull up Apple, see where that is trading at today. So down a little bit with the overall market, kind of in line with what we've seen, down 1.7%. But you see last week, after a little bit of a reaction to earnings and then some nice upside, last week Apple finished 5.8% higher, or 5.75% higher, down just a little bit today. I think that this is quite normal after such a strong week. A little bit of a pullback, especially when there is so much data to be released this week. But Apple, nice bounce after the earnings reaction there. Things are looking pretty good, even though we are down 1.6%. At least pretty good, all things considered, when we review some of the stocks that we just looked at. So what the heck is going on this week? Well, it is another busy week for earnings. We could look at AMD. This is a position that I am in. AMD did pre-release and announce expectations that were lower, basically saying, hey, the quarter sucked. And we'll see now if it's not as bad, or if traders say, this is all priced in at this point. I'd love to see. Yeah, actually, I'm kind of mixed on this one. I definitely always want a stock that I'm in to go higher, but when I put on a wheel trade, although it doesn't happen too often, if the stock does slide, I've been able to collect some nice premium. I've been in this for a while. Had an opportunity to get out. I did not. In hindsight, I wish that I did. But whenever I get into a position, I'm willing to manage it. I'm willing to see this through. And at these levels, I do think that AMD is attractive. Looking back at support, though, I see this range back here after the pandemic sell-off. It looks like we have a little range between 50, maybe 55. And so I've been holding off on adding to this position, seeing if we could get in around there, seeing if I can get in around there, and then bringing down my cost basis significantly. So kind of have mixed feelings about this because on one hand, I just love to see this take off and rally. On the other, I wouldn't mind adding to this at a lower uh, level and then see the stock rally. And that's something that Markus did with NVIDIA. He added to NVIDIA down here, adding at 120, selling some puts, collecting some huge premium on the put side, bringing down his break even more with that trade. And now I believe his cost basis is around 160. So he's not too far away from his cost basis. That's why I kind of have mixed feelings about AMD. I'd love this to just take off, but on the other hand, if it dropped a little bit, found some support, I'd love to pick up some more shares, bring down my cost basis, and then see it rally. Either way, regardless of what I want to do, AMD has earnings tomorrow after the close. We also have a few other names this week. We have Qualcomm. I believe that they're releasing on Wednesday. Similar chart to AMD here after this slide, some consolidating, trying to figure out where to go from here. We also have SBUX. I believe that this is Thursday. SBUX just finding this real nice range here, sitting tight right in between these highs and lows. So we'll see if that, the earnings release gets SBUX moving. So busy week for earnings. However, that's not the big item this week. Traders are going to be focused on the Fed. Let's look at the economic calendar. We see that today, not a whole lot going on. Tomorrow, we do have ISM manufacturing PMI, JOLTS job openings. But in all honesty, traders are going to be paying attention to this biggie here. The FOMC statement, 2 p.m. Eastern time on Wednesday. So that wraps up the two-day policy meeting of the Fed. This press conference, though, is really the biggie here because at this point, investors believe that the Fed's going to raise rates by 75 basis points. That's factored in. It's priced in. Anything different than that would be a huge, huge shock. What traders and investors are looking at, though, is what the Fed has planned when it comes to future hikes. Are we slowing down? Will the Fed be aggressive? Does the Fed expect that now we're seeing peak inflation and that their policy has worked and the rate increases have done their job? That type of wording would definitely have an impact on the market. And it's really what traders want to hear and see and why Wednesday is so important. If we go to the Fed Watch tool here, we see the countdown, and I'm just refreshing 2 days, 2 hours, 46 minutes and 50 seconds. And here we see that 89% probability of a 75 basis point hike. But what they really want to know, what traders want to know is where does this end? So, I even saw economists at Goldman Sachs expect the Fed to raise rates and for it to peak around 5%. This is kind of what we see here. But the question is, will we get to this level? Will we pause? That's what traders would love to see that. And will we start to see the hikes after the pause start to slow down or actually decrease? So dropping the Fed funds rate sooner. Right now, the first drop is planned, or the probability is that it will take place November 1st, 2023. So this change based on the wording could definitely have an impact on the markets. And if it seems like things will slow down, that could be a positive for the markets. But if the Fed stays aggressive, this is where you have the hawkish versus dovish commentary, right? Hawkish meaning that they're aggressive with their rate hikes, and policy dovish means that they're calming down. They have a less aggressive stance, which is better for the economy, and that is to be seen. So that's why Wednesday is such a big deal. The end of the week, we also have a biggie, the jobs report. So this is coming out after the Fed policy decision, but it is something that the Fed is definitely going to take into consideration when it comes to their next meeting and what they want to do. Average hourly earnings is what they're closely looking at. And then you also have the non-farm employment change. Will we see jobs starting to struggle, the unemployment rate creeping up? And that is what the Fed would like to see without causing a huge problem for the economy, just things slowing down. So there's less buying power, purchasing power by the consumer, which means there's less money being spent, and which means that higher prices cannot be supported. So prices must decline and inflation will drop, which is the whole plan with our rate hikes anyway. So, a lot going on this week. And how do we trade these crazy markets? Well, if I look over here at Google, this is a position I'm in other than AMD. Google, I love this reaction and this bounce, getting back into this range here on Friday. Although we're pulling back, kind of flirting with the 94.50, 95 level. For me to sell calls again, I would really want to see this get back up to around a 100, and I bet I could start selling 104 calls. I do have some nice premium collected on this one. I do have a decent break-even level. I want to see it's about 98. I don't feel I need to be aggressive with call selling here, and I can wait. Although I'd love to see these levels hold, kind of where we closed after earnings, and in this upper range here. At this point, though, Google down 1.8%. So I'm watching this. Hopefully, with some volatility and movement this week, I could sell calls. Today, it was not an option, at least at the strike I wanted with the ROI that I was looking for based on our PowerX calculator. Now, LVS gets a little bit interesting because LVS trading at 38 bucks. And here you see these wild swings in LVS. Beginning of the month, we rallied up to 43, and then after earnings, we dipped to 33. This is a huge move for a $38 stock. Now, Markus and I, we both have shares cost basis around 47 up in this range. But our break even is substantially lower because we've been able to trade this for a while now, selling calls, doing rescue missions, selling puts, just a lot of premium captured. And this is why a month or so ago, we started selling calls a little more aggressively than we typically would at 42. Markus picked 43. But here we were able to sell calls for a couple of weeks, bringing down our break even more. I'd love the opportunity to do that again, although I do believe we need to get back up towards 40. So nice to see that LVS is like a honey badger and just doesn't care. Markets are down, LVS is up. But we want to see this go up to 40 plus so we can start selling calls again. I'd love to take some premium and bring our break even down. All in all, this is looking like a pretty good wheel stock after just having a nasty early run right after we got into this. But moving sideways, nice ranges here. We know the story. We know it's a solid company. We know that just some changes in the profitability of the company can change, but COVID measures and the travel to Macau really holding this one back, but it could spike on good news, and that's what I would love to hear. So for me, seeing if we could get a move in Google where I could sell calls, seeing if LVS pops more so I could sell calls, AMD waiting until after earnings. Would love to add to this one if I see it pull back a little bit, but I'll take a rally after earnings. This is where I am not a gambling man, but I am one who can take high probability decisions and trades and risk money based on that. I do believe that earnings is a little more of a gamble because it's really a one-off event. It could move up, it could move down. Over time, though, I believe AMD definitely has some more upside. If I had to guess, I do think that AMD will move higher after earnings because of the pre-release. I think that set traders up for the earnings announcement. But hey, we'll see. We'll see. Earnings after the bell tomorrow. So to wrap it up, biggie week. Pay attention to the Fed on Wednesday, jobs on Friday, earnings throughout the week. I do expect some volatility. This is what Markus and I talked about this morning with our mastermind group. I do not feel we need to be aggressive here at the beginning of the week. I do believe that there could be reactions to the upside and downside, some volatility here. So I do have some room in my portfolio to add, but I want to wait until there's a better opportunity. And for me, that's generally selling puts on down days, selling calls on up days. And at this point, I would say that this move is normal and to be expected based on last week's rally. So I'd like to see a little more of a reaction, a little more volatility. and potentially getting the Fed out of the way before I pick up some trades. So that's going to do it for today's stock market update. Hope you enjoyed the video. If you did, don't forget to like the video and leave a comment. Leave a comment. I'll see you tomorrow. Until tomorrow, happy trading, everybody.